Hi, everyone. Welcome to Thunder Gold's webinar. We're just going to give it a few more minutes to let some more attendees join in, and then we'll do an intro. We'll just give it a few more minutes to let the last few in, and then we'll hand it over. Okay, it's 1 p.m. Eastern on the dot. I think we'll get going. Good morning, everyone, or good afternoon, depending on where you're joining us from. Welcome to Thunder Gold's Investor Update webinar, specifically about the Tower Mountain MRE results. My name is Caitlin Taylor, VP of Investor Relations at Alliance Advisors, and I will be your moderator today. A friendly reminder that today's webinar is being recorded and will be made available on Thunder Gold's website and YouTube channel. Before we begin, I'd like to note that certain statements made during today's presentation may constitute forward-looking information. These statements are based on current expectations and assumptions and are subject to risk and uncertainties that could cause actual results to differ materially. Please refer to Thunder Gold's public filings for more information. I'm joined on today's webinar by Wes Hansen, President and CEO at Thunder Gold. Wes will provide everyone with a company update. Following that, we will open up the webinar to a moderated Q&A session. If you have a question, you can just submit it in the Q&A box located at the bottom of your Zoom screen. And with that, I'm happy to hand it over to Wes to kick things off.
Thanks, Caitlin, and thanks everyone for taking the time this afternoon to join us. Got a lot of updates to get through in the next 30 minutes or so. So thanks very much for taking the time today. Look, you guys have, or most of you should have all seen forward-looking statements and disclaimers by now, so we'll just zoom past that and get to the important stuff. Look, Tower Mountain, Thunder Gold, the investment highlights are pretty compelling. First and foremost, I think we've just demonstrated with our recent mineral resource estimate issued on the 26th of January, 3.5 million ounces, largely inferred at this stage, but based on 47,000 meters of drilling. This is a fantastic opportunity. We've always seen tier one discovery potential at this particular asset, and that's starting to flesh out in the results as we move this project forward. Look, you literally couldn't put a gold mine in a better place. I think Canada is the greatest country in the world. I think it's politically stable. I think that we don't have our employees being kidnapped. We don't have our, riots in the streets. This project is easy to get to. It's in northwestern Ontario. It's 40 minutes from downtown Thunder Bay. It's close to a population center of 110,000 people. It would allow not just the exploration staff, but future, if there is a mine built here at some point in time in the future, people will be able to live and work in the community that they choose to live and work in, and that's a huge benefit in terms of employee retention. I was going to say attraction and retention. Came out retraction. Wow. Anyway, look, it's a perfect location, right beside paved road, highway access. We can operate year round. We have drills spinning as we speak today. Easy to get to. There's no mountain passes to go over. You don't have to hump onto a helicopter or a fixed wing aircraft to get there. You drive there, and your coffee's still hot by the time you get to the core shack. So that's a huge benefit. Again, I already touched on the large scale resource potential. I've got more targets than I could possibly drill with whatever limited time I have left on this earth. And I'm not planning on dying anytime soon, but there's a lot of targets that are available to us to drill test on this property. And I think it'll all generate good news. We're very capital efficient. About 66 cents of every dollar we raise goes into a data point in the ground. We don't have a we don't have to maintain a large office space. We don't have a large number of employees working for the company currently. I don't That'll change obviously as we grow this deposit and start to get more and more knowledge and require more and more drilling and more information management and things like that. But right now we're very efficient with our shareholders' dollars, and we like to make sure that most of those go into the ground. Our all-in drill cost, our discovery cost per ounce is less than $4 an ounce based on the resource estimate, and our all-in drilling costs are probably very close to the industry leaders at 275 bucks a meter, and that's with one drill operating. So the more drills you have, you can knock that cost down. You can have some leverage over your diamond drilling contractors and get better rates, leverage over your assay labs with better sample flow, so we can reduce those numbers. And that's always a positive thing for shareholders. In terms of exploration upside, there's both short-term, immediate exploration opportunities, certainly within the pit that contains or constrains the mineral resource that we released in January. We have opportunities immediately adjacent to that pit that require additional drilling in order to bring them into the pit limit. And there's opportunities that are farther away. The entire boundary of the Tower Mountain intrusion is prime hunting ground for additional discovery, and it's untouched. There's over 7,000 meters of untested strike length, conveniently orientated in a circle, which is exactly the shape of an open pit. In terms of management style, I've been doing this as a geologist and a few other jobs in the industry over the years, but primarily as a geologist, I've been involved in the industry for over 45 years. David Speck, our CFO, has been involved in the industry for 30 years. We have a number of board members who I'll get to later in the presentation with lots of experience in the geological side of things. So we've got an experienced team. We've got a firm handle on what type of deposit this is. We've got excellent exploration vectors guiding our exploration and making it more efficient. And most of all, we're delivering on our promises to the street. We hit every major objective that we released last year. Nailed it, kicked it right through the middle of the uprights. So very pleased with that. Talked about our location relative to infrastructure. Thunder Bay is in the lower right-hand corner of this map, northwestern Ontario in the province of northwestern Ontario. Thunder Bay is a port city on the St. Lawrence Seaway, so you have access to world markets, both in terms of bringing things to the site as well as taking things away from the site, and I'll elaborate on that further a little later. 40-kilometer drive from Thunder Bay. I can get there from downtown Toronto. I can get to the Korshak in 3 hours, assuming Porter flies on time. Thunder Bay is a resource town. It's long been a center of mineral exploration and resource development for as long as I can remember. I actually started my career in Thunder Bay in 1979 out of university. So it's nice to come home in some respects. Very safe political jurisdiction, no significant political turmoil, year-round work season. I mean, we can work 365 days a year. So lots of benefits in terms of growing this asset. All of this amounts in what it means in the bottom line is basically you have lower costs and faster development timelines for any projects that close to a major city like Thunder Bay. Resource estimate overview. This is just a snapshot of the highlights. 3.5 million ounces in total, 500,000 ounces of indicated resource at a grade of 0.46 grams a ton, 3 million ounces of inferred resources at a grade of 0.45 grams per ton. Strip ratio, that's just premium strip ratio at 1.8 to 1. So 1.8 waste tons for every ton of ore. And I'm going to come back to that in a moment. It's all based on a gold price of $3,000, which is significantly below the current gold price. Our total operating costs for the pit optimization added up to about $19.90. And our all-in discovery cost per ounce is $3.95 based on that 3.5 million ounce total. The graph on the right is enterprise value per ounce of a group of peer companies. These are all companies that have large tonnage, low grade assets that are in development. There's no operators here. I guess you could I could have added a couple of operators that kind of skews everything simply because they're valued at a much higher level. These are all companies with large tonnage, low grade deposits, similar to Tower Mountain in terms of size and grade, that have technical reports that have disclosed their cost basis or their enterprise value per ounce. And you can see Thunder Gold is on the far right-hand side. It doesn't even really show up. And basically, what that amounts to is that we're valued at about $10 per ounce relative to our peer companies that are all, kind of significantly higher. The average of the peer group is 28 bucks. And if we look at global statistics for the mining industry, Mineral Valuation Group in Australia just issued their report for 2025. They're indicating inferred resources are valued between $24 and $44 US an ounce. So we're significantly undervalued on an enterprise value per ounce basis. We have multiple short-term and long-term exploration targets to drive growth. Again, a premium location, politically stable, and a year-round work season. So a lot of positives here. If we benchmark further to the Canadian large tonnage, low grade peer group projects, what we see is in terms of resource tons, we're in the top 25%, even though we've only drilled 47,000 meters. Most of our peer group in this chart on the far left, the resource tonnage, they've got well over 250,000 meters of drilling. We're sitting here at 50,000 and in a very enviable position. In terms of the average grade, we're in the lower quartile, the bottom 25%, but that doesn't really, I'm not really upset about that at all. What it means is it's a more predictable and more stable geological population than most. And our strip ratio is we're at the top of the class on that one with the 1.8 to 1. We can increase the strip ratio to increase our grade, but it actually ends up costing you profit if you look at it on a discounted cash flow basis, which of course we haven't done, but I have. And there's lots of upside. There's lots of games and balances you can play with this thing to sort of refine it. But that's down the road. We will basically get to that stage probably by the end of this year. The initial resource estimate was not the time we wanted to do that. We wanted to get size and scope and figure out establish the playing field where we would focus our exploration work in order to convert as much of that resource into indicated, measured and indicated as possible in the coming year in advance of a scoping study to start evaluating the economics of the property as a whole. So if we look at the grade tonnage cutoff curve from the mineral resource estimate, here you can see the optionality. If we go to a 0.4 cutoff, we can get our grade up above, 0.7 grams per ton on average, but you reduce your ounces and your strip ratio goes up. That's not a horrible thing. I mean, I wouldn't go much beyond a 6 or 7 to 1 strip ratio. If we look at the impact on your estimated operating cost per ton on the graph at the bottom, you can see we're kind of right in the middle of our peer group. It's a good place to be. We're kind of not too low, we're not too high. We're kind of in the just right range in many respects. So I like the 0.19 gram per ton. I think it's a good starting point, and it means we're able to maximize value by drilling inside that pit to try to convert those 3.5 million ounces to the measured and indicated status. In terms of exploration opportunities, again, I talked about it earlier. There's multiple paths to increase our resources. This is the block model with the drilling overlaid on it. You can see the high grade plus 1 gram intervals in the drill holes that are present. Those are 25-meter drill spacings in this area, so you can get some idea of the scale. But what's important here is the blank space. So these blocks are being interpolated from drill holes that are either 50 meters into the section or 50 meters ahead of the section, if you can follow that. It's coming from a different drill hole that doesn't plot on this particular section. And that white space or that space there offers a great opportunity to convert. This would all be classified as inferred resource. Drop a drill hole in there, bring it into the indicated category, and allow us to do a better scoping study in the future. About 20% of the current pit limit is white space, what I term white space. And what that means is that there's no drill holes within 100 meters. So there's no estimated block in that. We did account for that tonnage. We just assigned it the average specific gravity or bulk density. and treated it as waste, treated it as material at a grade of zero. But we don't know what's there. We could drill a drill hole down this left-hand side through this white space, and I would bet that we're going to encounter similar mineralization to what we see here in this hole, a series of high-grade 1 gram hits with a bunch of you know, zero point 0.3 to 0.7, zero point 0.8 gram per ton in between those 1 gram hits. That's pretty typical of what we see there. This is the pit rim that you see, the black line. You can see it terminates here at this elevation. We've got 2 drill holes below the current pit bottom in this particular location. Both of them are still in mineralization. That's a prime exploration target because we still have lots of space to drop this pit down, capture higher grade mineralization at the bottom. And chances are, based on the geological model that we're using to guide our exploration program here, we see this as an intrusion-related gold deposit, which typically converts into from this disseminated low-grade cloud near surface. As you go deeper in these intrusion-related gold systems, what you see is you get much more sheeted veining and more consistent higher grade mineralization in a different alteration unit than what we're currently confined to with our existing drill pattern. So lots of short and long-term potential to increase the resource. Just without putting anybody to sleep and without getting too complicated, try to explain why the gold is here in the first place. On the right-hand side, you have an image. You can follow along. These pink colors are the Tower Mountain intrusion or the Tower Mountain intrusive complex. It's a calc-alkalic intrusion that's been active over a long period of time, multiple phases to it. Some of the phases are syenite, which is sort of that pinkish tone at the very top. There's a monzonite, which is the lighter pink color in the middle, a diorite, which is more of the purple color at the bottom. So those are different phases of that Tower Mountain intrusion. And the Tower Mountain intrusion is extremely important to the distribution of gold in this system. First, before the intrusion came along, we had volcanics being accumulated here from volcanic activity, a lot of extrusive rocks, andesites, dacites, nothing too exciting. Basically, action started when the intrusion started to come into these pre-existing volcanic rocks. It shattered and created fluid pathways all the way around the intrusion. That's our interpretation currently. That shattering allowed the flow of hydrothermal fluids from subsequent phases of the intrusion. So you have the first phase comes through and it shatters the rock and breaks it all up and creates all of these fractures. Then you have these hydrothermal systems that are rolling through as other intrusive phases are brought in over time. They alter the host rocks. They introduce all kinds of good things into the system, including iron and gold. And really, that's what we're looking at here, this yellow dashed line that surrounds that intrusive core. That's a zone of what we believe is phyllic alteration, basically carbonate and sericite, plus or minus pyrite. And if you have the pyrite, you generally have gold in this system. So everything's kind of happening at once. You see this alteration, the amphibalization, the epidotization, and the carbonation and ceratization, chloratization. All of those alteration processes are happening. They're related to hydrothermal fluid flow that ties back to this intrusion. And it's just illogical at this. There's no evidence denying the fact that it's there. It's kind of like a Schrodinger's deposit in some respects. But if you've got gold mineralization here in our pit, which we know we have now, it's not a stretch of the imagination to assume you have the same opportunity around the 7,000 meters that's untouched with drilling that surrounds the rest of the intrusion. And that's really what we're saying here is that's the upside opportunity in the long term. Tracking that sericite altered halo. It's 500 meters wide. It's down to a depth of over 500 meters. We've tested it for 1,800 meters along this western contact, and we're betting that it's there in all the other areas. And I'll show you why in a moment. In terms of our exploration vectors, here's the exact same image at the exact same scale. You can see the intrusion here is represented by these pink tones, which is a magnetic response of a certain phase of the intrusion. But what I don't like the hot colors, even though they're more pleasant to look at. I'm way more excited about the blue tones and especially the deep blue tones. So this is a inversion of our magnetic data. You can see the underlay of the pit. This is our open pit here on the western contact of that intrusion. You can sort of make out a very intense blue color kind of running up the middle of the pit. That's a mag low response. It's probably a result of the alteration destroying magnetite, primary magnetite, converting that to pyrite and redistributing it within that alteration halo, which is currently bounded only by drilling. That halo could continue further to the west. We don't know how far it goes. And right now, that's the biggest excitement I have about this project is this 3.5 million ounces is drill constrained. It's not physically constrained. It's not limited to a certain rock type or a certain alteration unit. Right now, the only thing limiting the size of this thing is we don't have enough drilling. And that's always a good problem to have. So, on top of the system that we know about, we also have these very intense mag lows starting up here in this northeastern corner, wraps around perfectly, comes down here. That's entirely untouched. The one area where we have tested this mag low is here at the P target in 2024, 2025. Statistically, the P target is not included in the resource estimate. It's probably about 100,000 ounces of additional mineralization at this stage. But the P target that we drilled in 2024 returned a statistically identical population to the 47,000 meters defining our pit. So same kind of rocks, same kind of alteration, same type of grade, same interval lengths. I mean, it's just same. Very limited strike length of about 150 to 200 meters at the P target. It's open further to the southwest, which is kind of the linear direction of the magnetic low response that we believe represents mag destruction and probably potential gold source. And then you can see another intense mag low target on the southern boundary, which is also untouched. So all of these things, we think magnetic or airborne mag survey is probably our primary exploration vector. We overlay it with soil samples, rock geochem samples, but when in doubt, drill the mag low, especially if the mag low is coincident with the contact zone. We have done a significant amount of metallurgical work. We've collected over 16 representative samples from the deposit. All of this will be highlighted in the technical report, which should be issued in a couple of days, hopefully in time for the start of PDACs. I'm sure you're all going to take the time to read it rather than enjoy everything the PDAC has to offer. But in a nutshell, our metallurgy is in pretty good shape. We've got 16 representative samples. They were analyzed by 2 independent qualified laboratories. The samples were collected from all observed lithologies at all observed gold grades and all alteration styles that have been noted to date in our logging. They range in terms of gold content from a low of 0.267 grams per ton to a high of 4. They're not selectively targeting higher grade mineralization within the population. We tested all the various gold ranges, gold grades on purpose so that we'd have representative indications of recovery at the different, to see if there's any difference. Like, does 0.26 recover different than 4? And the answer is no, it doesn't. On average, the 16 samples averaged about 84.1% recovery, which the mineral resource estimate assumed a recovery of 80%. So we're a little bit pessimistic on that scale. No systemic bias was observed relative to lithology, relative to location, relative to the alteration, the grade. In many respects, the metallurgy is as consistent as the distribution of gold within the system itself. And that ties back to the style of mineralization we're talking about here, which is basically an alteration halo, magnetic destruction, widespread pyrite mineralization, plus or minus gold, and it just fills the area. It's kind of like in its simplest form, or a form that you may be more familiar with, it's like a porphyry copper gold system without the copper. The other nice thing about the metallurgy, we know that the mineralization is net acid consuming, and that's because of the alteration, because it's a carbonate sericite alteration. The carbonate neutralizes any acid generation generated by the oxidation of pyrite. And that's a huge future strategic benefit to have in the bank, because what it means is it reduces the engineering costs of designing and building a major mining project like we're talking about in this particular instance, because you don't have to have specialized containment for your waste rock. You don't have to have specialized containment for your um, short-term stockpiles on surface and your long-term stockpiles on surface, because you're not draining acid into the environment. So it makes things a lot easier in that front, and probably would significantly reduce permitting time going forward. Big plans for 2026. We announced, some of you are probably aware, we announced the financing earlier this week. Basically another $2.5 million. That will allow us to do the 1,500 meters of drilling that we have planned for the first half of this year. We have the drill turning on site as we speak. It's going to be a mix of resource definition drilling, so trying to tighten up or convert inferred resources to the measured and indicated status. But we're also going to do a few deep exploration holes to see what's happening deeper in the system. We have very limited information over probably 90% of the strike length. We've got two holes that go deep, and sadly they're on the same section. Not that was an error. I'm certainly very bullish on the results that we're going to pull out of this work. We're going to do some additional metallurgical test work. Basically, we know it's recoverable using cyanide, like typical cyanidation of the gold ore. We want to take a look at see what flotation does for us, see if we have an opportunity to upgrade the gold content, recover 85 to 95% of the gold by recovering a pyrite con, and then treating the pyrite con, or sending the pyrite con to a smelter, perhaps. And certainly having access to the St. Lawrence Seaway makes that a more viable alternative. But there's a lot of hoops to jump through, but we've got to make those initial steps. We also got to start designing our environmental baseline studies and cultural surveys, and get the ball rolling on that front. And everything is dedicated towards reducing the permitting timeline, because look, gold prices are at all-time highs. I'm bullish and confident they're going to continue to increase certainly in the short term. But if you look at the time I've spent in the industry since 1980s, gold prices have really only done one thing over the 45 years I've been involved. So, in the last 25 years, I think gold prices appreciated at about 10% every year. And it's one of those things that's not logical that that's going to stop anytime soon. So positioning now and getting ready for a major project in the future as quickly as possible is probably a wise move. Uh, we'll probably have to finance again mid-year. Certainly hoping to do that at a much higher share price than we have currently. Ultimately, we're looking at doing another 10,000 or more meters in the third and fourth quarter of this year. But the overall goal and objective for 2026 is update the mineral resource estimate at the end of quarter four of this year, and initiate our scoping study and start nailing down the economics of this project. And I think that's really going to surprise a lot of people. Come out of 2026 into 2027 financed, and start our environmental baseline, our cultural studies, environmental permitting, preliminary engineering work, get the ball rolling on this thing as quickly as we can, and take advantage of the fact that we're located closer to infrastructure than a lot of less fortunate companies out there today. In terms of where we're going to do our drilling, pretty easy. You can see these longer holes here. The black lines are the sort of amoeba-shaped black line is the pit limit, the current pit limit. Most of our drilling is taking part inside that pit limit. And basically the longer holes are deeper holes that are targeted specifically to test this system at depth. We're going to take advantage by deepening some pre-existing drill holes to shorten, make our drill program more efficient and keep our costs down. But basically our focal point is inside the pit, probably 8,000 meters of drilling that's dedicated towards resource growth and 15,000 meters of drilling that's focused on conversion of inferred resources to the measured and indicated status. We were also fortunate this year to be one of the recipients of Ontario Junior Exploration Program funding. We're going to use that money to come off and drill some of these targets, starting over here on the far western side of the property. You can see our property boundary in this area. This is called the target. It's likely associated with Temiskaming sediments that are overlying the Thunder Lake Fault. There's been some historic numbers in the assessment reports along this trend, 2 to 5 grams per ton over a couple of meters. So we're going to start probing that in that area. We have another one up here at this Northeast 1 target, which is testing this strong magnetic low that I was talking about earlier in the presentation. And we'll probably do some drilling down here to the south at the 128 target as well. This is the mag. Again, this is the mag overlay. The hot tones are magnetic. The blue tones are not magnetic. And again, drill the blue. Drill the blue tones. That's the secret here. This give you an idea of where we are in terms of comparables with costs of production. The two red lines on either end are two mines that are operating in Canada today. They're both run by Agnico Eagle. They're extremely efficient mining projects. There's a Detour on the left at 0.85 grams a ton, and there's the Macassa mine on the right at 15.5 grams per ton. That 15 gram per ton difference, basically at average grade, equates to about a $50 saving in terms of their cash costs of production. And then all the others that are in here, you can see Blackwater, which is a project in BC, Troilus, which is in Quebec, Novador in Quebec, which has been sold, Moss Lake, which is in the Shippandaman Greenstone Belt. Their average grades are at the top of each bar, and their estimated cash cost per ounce of production are shown by the columns. And I'm showing you this because basically I fully expect I'll be above this $1,200 an ounce range for this project when we look at our scoping study. But with gold at $5,000, that's a fairly hefty profit margin that we can capitalize on with our shareholders. So, low grade deposits, a lot of people shun them. I love them. I think they're stable. They're as stable as the jurisdiction in which we're working in. They're predictable. There's just no drama. There's no missed production deadlines. You're making money all day, every day with these large tonnage, low grade deposits, and we're fortunate to have one that we're able to advance. In terms of our shareholders, we've got about 18% with insiders, 23% with high net worth individuals. We've got currently 3.2 million in the treasury. That's almost exclusively flow through dollars. So we've got to expend those for exploration. The $2.5 million financing we just announced is strictly for hard dollar raise to allow us to do corporate things. A lot of that would get invested into exploration as well, to be honest. We're not flying off to conferences all over the world and staying at we're spending our money as wisely as we can, and I still firmly believe after 45 years in the business, the best place to put a dollar is in the ground. So that's where I prefer to put it. We've got 280 million shares currently issued and outstanding, 14 million options, about 80 million warrants. All of the warrants are at 10 cents, so they're all in the money as of today. We're starting to see some of those warrants being exercised as we're trading in the 14 to 15% range, 14 to 15 cent range currently, which means our market cap is about 35 million bucks. So positive news, management and board. Again, I told you about myself. Anybody can look me up and see what I've accomplished over the course of my career. I've got a lot of experience with large tonnage, low grade deposits throughout the world. Elliot Strachan is our chairman. He's been with the company. He's been with this company for over 40. He's been with this company as long as I've been a geologist in many respects. So that's kind of interesting. He's been here for the good times and the bad, but the big thing about Elliot is he's probably our biggest believer in terms of the stock and supporting the stock and going out there and getting behind the project and putting his money where his mouth is. Nigel Lees is he's got over 30 years of experience in merchant banking and investment banking, and of course has sat on several boards, including TVX, and he founded New Break Resources, which has recently come out with some great news, and he's been a director of, or was a director of Yamana until just recently. David Speck, our CFO, he's also our corporate secretary. He pulls a lot of the heavy lifting in terms of pulling together the financings and herding all the cats and rounding up financial statements and so on. So he's an invaluable contributor to the company's success thus far. And then the final two directors, Scott Bevins and Warren Bates, they're both geologists like me, over 40 years of experience in the industry. Very between the three of us, there's really not many type of deposits that we haven't seen or worked on in the gold space over the years we've been involved. So, you know, both Scott and Warren have been great sounding boards for a lot of the ideas and theories that we've put into play when we've been chasing the exploration upside of the Tower Mountain project going forward. Why invest now? Well, the case isn't as compelling as it was last month when we were trading at 6 cents, but at 15 cents, we're still undervalued relative to our peers. You know, we're currently valued at $10 per ounce basis, whereas you know, our peer group is three times higher than that, and industry wide globally, it's 5 to 6 times higher than our $10 price. So lots of upside, I think. Lots of upside potential both through the drill bit and through getting the news out and getting some recognition and getting some buying power behind the stock. All of those things are starting to happen for us, or the train's leaving the station and it's time to get on board. We see district scale discovery potential. It's not just us that are active in the camp. There's been positive news flow from our neighbors, our immediate neighbors at Delta Resources. Recently, Gold X2 has been very successful and seen a great deal of new investment into their company. They're starting to get some um, strategic shareholders involved to advance their project that's 60 kilometers further to the west. You know, again, I think they started at a similar kind of original resource grade in that point, you know, zero point 0.5 to zero point 0.6 gram per ton range. And over the years, as they did the infill drilling and they were able to stitch together higher grade cores and shears, et cetera, they were able to upgrade their resource significantly in terms of the grade. We hope to do the same thing. We have a very clear path for value creation. We know we've got a plan. We know what we want to do. We know how to do it. We believe we can execute it, and we also believe we can deliver on our promises. So we see lots of upside growth. There's a significant growth opportunity here, both in the pit as well as immediately adjacent to the pit and around the intrusion itself, the 7,000 kilometers of untested strike length. Great team to work with. We've got a very attractive entry point in terms of our share price currently. Our infrastructure advantage simply can't be beat. And if you don't really understand the benefit of infrastructure, you know, there's been studies done that are showing that the farther you are away from a road, the higher your costs go. And it's just simple mechanics. I mean, to ship tonnage on rail is, you know, about a third of the cost is to do it by truck in this country. And when you have access to sea lanes, it's even cheaper. We're very efficient. We're very careful with our dollars. Again, 66 cents of every dollar is going into a drill data point or a surface data point or some sort of a geophysical survey or a metallurgical study. We're not frivolous with the shareholder money by any stretch of the imagination. Low drilling costs. I think we can get our drill costs down under 250 a meter, which is kind of the gold standard for a lot of companies in Canada. And our discovery cost per ounce is 395. But I'll be somewhat fair and say that's skewed by the fact that it's an inferred resource. As we start to infill, that cost is going to go up, but that's still a very attractive price point. Just quickly here, I'm going to show you. You can see these three black lines. This is a hole, drill hole 25-180. It's right in the heart of our mineral resource. The following four slides are just to give you an idea of what the rock and the gold grade distribution looks like. You can see the darker gray black rocks up at the top. averaging 1.6, 0.5, 1.9, 0.6, 1, 0.5, 0.3. This is probably a dike where it drops off below zero point 0.1 uh, for about a 3 meter interval, 4.5 meter interval. And then it starts trending into more intrusive rocks. And the continuation of this system, again, these are all intrusive rocks. And there's gold in the intrusive rocks. And when people ask me why I took the job, this is why I took the job as CEO of the company, because nobody wants to be the CEO of a junior mining company. It's a thankless task in a lot of respects, but this intrigued the hell out of me. Seeing these kind of gold grades in an intrusive rock, that's unusual, and it basically said that there was something special about this deposit. Everything you see in the photo is about a 17.5 meter interval at 0.3 grams per ton. That would make it into our mineral resource estimate and would absolutely be profitable at $3,000 and twice as profitable at $5,000. A little deeper down so that first arrow here, that's at the very top of this particular run of mineralization in hole 180. We're coming down a little deeper into the system in this high grade plus 1 gram interval down here. So that's this box from 228 to 246, 18 meters at 1.4 grams a ton. That's that's pretty much as good as it gets for us. We don't see a lot of assays. The assays over 10 grams per ton are rare. I think we only have 7 assays out of a population of 30,000 samples that averaged better than 15 grams per ton. So this is as good as it gets for us. Again, you're coming out of an intrusive unit, the point 0.5 grades up here, and then you're coming into the higher grade volcanic breccia down below. This is all breccia. It's very intensely altered. You can see if you um, download the presentation and look at it from the website, you can see significant increase in pyrite content, like up to 20 to 25%, where your grades are highest. All of the gold we see is related to pyrite. The veining that you see in this picture, our interpretation is currently that veining has zero impact. It's not bringing gold into the system. It could be in certain areas, it could represent the last gasp of the hydrothermal system, and it's a late stage overprint. But if you go out and start trying to chase these veins, my interpretation of the system is that you're going to fail because you can't follow it from hole to hole or section to section, at least not at the Tower Mountain project. And then the very bottom of the unit, you can see it starts to get sketchy in terms of continuity of grade, but you're going from zero point 0.7 to less than 0.1 to 0.2 to 3 grams per ton to 0.8. It's kind of all over the map, and that's kind of indicative of where you're getting, less consistent mineralization. Again, you can see significant amounts of veining, but the veining doesn't always equate to high grades. And and that's something that we see consistently throughout the entire deposit. So just sort of a teaser for you all to take your time on your own to sort of go through things. And with that, I think we'll stop the presentation, the formal presentation, and go to the question period. How would I do for time? Wow, I talked a long time. I'm sorry for that, Caitlin.
No, that was great. Thanks so much, Wes. As Wes said, we're going to open the floor to Q&A. So if anyone has any questions, you can just drop it in the box down below. We have a few coming out now. The first one says, conservative market cap should be 100 million currently. What are your thoughts on it?
I think that's probably a fairly fair number. If you look at our enterprise value per ounce, um, I certainly think we are undervalued relative not just to the peers, but to our market in general. And I think as we get the story out and attract new investors to the story, that number is gonna go one way, and that's up.
Okay, amazing. Second question, what differentiates Tower Mountain from other projects, either in Canada or across in the jurisdiction?
Well, I think Tower Mountain is kind of a unicorn deposit. Again, it's one of the reasons I decided to join the company back in 2022. it's unusual. It's extremely interesting. I've never seen anything like it in Canada. I've seen, in a lot of respects, it's fairly similar to the Fort Knox deposit in Alaska, which I worked on with Kinross Gold. Fort Knox is an intrusion-related gold deposit. A lot of the deposits further north in the Yukon. In the white gold area, for example, those deposits are all being, you know, put forward as intrusion-related gold deposits. And I think it was missed at Tower Mountain because there's a late oxidation overprint. There's a late hematite alteration overprint of the system, and that ties back to the carbonate being so intense. The carbonate strips out some of the iron and oxidizes it, but it's a reducing environment. We know that because you see the magnetic destruction, which comes hand in hand with the pyrite, which comes hand in hand with the gold, and it's all widespread. And this thing could be huge. I mean, intrusion-related gold deposits are some of the largest in the world. They're common in the Abitibi greenstone belt. There's a number of cyanide-associated gold deposits in the Abitibi belt, which are fairly similar to what we're seeing at Tower Mountain. Um, Sometimes they have higher grade, sometimes they have lower grade. Um, this is just an exciting project and an interesting project from top to bottom.
Good. Well, happy we can hear about it. The next one said, other than the MRE coming out, what milestones over the next 3, 6 months, and 9 months can investors expect?
All of our milestones are going to be drill related. We currently have a drill on site drilling as we speak. Again, that's the benefit of being close to the infrastructure and close to a paved highway. We're 3 kilometers from the Trans-Canada Highway. We can operate year round, so we do. As long as we've got the money and the ability, we're going to be driving drill holes into this thing, and all of our news flow, certainly for the next 6 months, is going to be releasing results. Now, that being said, it becomes highly inefficient to do a press release a week when you have a one drill program. So we tend to accumulate a bunch of results, and we'll try to get those out on a quarterly basis. What we've been doing in the past is finishing a program, getting all the results back, doing all the checks and balances, make sure the QA QC is right, make sure that the lab QA QC is right. We have found errors in the past, both on our part and on the part of the lab that require re-assaying, so that delays you issuing your results. But we like to make sure the numbers we're throwing out on the market are as accurate as possible. So sometimes our results take an extra week. But in general, we'd be hoping to issue a press release every couple of months, updating everybody on results, updating them on the awarding of different engineering contracts and studies, like, for example, the metallurgy, the environmental baseline, just standard stuff.
Good stuff. And another question, is the intention to sell to a major or mid-tier or bring the project to production?
Well, I've said in the past, I've built 6 mines, and I'm not going to do it again. That's insane. It's it's not easy. It takes a very specialized skill set, and it takes a number of people that are in increasingly short supply. Like people my age are all retiring. The lucky ones. Some of them never made it that far, but yeah, I mean, it's possible for us to take this and drag the ball over the line and build it. It wouldn't be my first preference. I think ultimately what we'd want to do is just do good science and build this thing up and make the size attractive and make sure that the science is well founded and we de-risk the project as much as possible. And the more we de-risk the project, the more it becomes attractive for a producing issuer to take an interest in it. Um, you can't predict the future, but all I'll say is right now, if you look at the gold price and the appreciation in the gold price for the last year, there are producing issuers out there that currently have more cash on hand than they've ever had before. And that's a good thing for junior companies that have fundamentally solid exploration projects with low risk in stable political jurisdictions, in permitting regimes that are manageable, with very little drama. And I think that describes Tower Mountain to a T, where you couldn't locate the project in a better district. I think permitting risk is rather low. I think all the major project risks, there's basically five, technical, financial, environmental, um, and I forgot the other two. Look at that. Financial, right? Those risks are very low here in Canada. Geopolitical was the last one that was missing.
Yeah.
So
Okay.
we're in good shape.
Yeah.
Sell. We want to build it and have somebody make us go away, right?
Good strategy. Okay. I think that was all the questions that we had today. So, Wes, thank you so much for your time. And everyone, thank you so much for listening. If you have any other questions, please do follow up. The recorded webinar will be on our website as well as on YouTube. If you have any questions, feel free to email us at ir@thundergoldcorp.com. And then, last point of the webinar, the team will be at PDAC starting this weekend. So,
At booth number.
2752.
There you go.
Yeah.
See y'all there. We'll be there waiting for y'all to come by, and we can go through it in more detail or less detail, whatever you like.
And the MRE will be out. And are we bringing core as well?
You'll have some core, absolutely. Some nice
Great.
stuff.
Okay.
Cool.
Perfect. That concludes the
Thanks,
webinar.
everyone.
Thank you so much, everyone.